Well, hello, everyone. Welcome. I'm Fritz Mayer, Dean of the Joseph Korbel School of International Studies. It's my pleasure to welcome you to Faculty Friday. And particularly excited about today because today I'll be talking with Professor Ilene Grabel about a topic of considerable concern to us all, the state of the world economy in this COVID moment. Professor Grabel is just a wonderful scholar and teacher. All of you who know her already know that. She is a distinguished university professor at the University of Denver, professor of international finance at the Joseph Korbel School. She co-directs our graduate program in global finance, trade, and economic integration here at the Korbel School. And her work focuses on a range of things, but really on the political economy of international financial policy, institutions and financial flows, and the relationship between finance and economic development. Her recent book, When Things Don't Fall Apart, Global Financial Governance and Developmental Finance in an Age of Productive Incoherence, a term we'll come back to, has won multiple awards, the 2019 European Association of Evolutionary Political Economy Myrdal Prize, the 2019 International Studies Association International Political Economy Best Book Award, 2018 British International Studies Association Best Political Economy Book Prize. That's just a taste of the voluminous work of Professor Grabel. I should note that she's also an engaged scholar, not just writing books. She's a member of the UN Conference on Trade and Development expert group on financing for development. She's worked with the UN Development Program, with the IMF, with NGOs, and a host of others. So Ilene, just a great pleasure to talk with you today. Thanks for being with us.
Thanks so much. It's a great honor to be here.
So just to remind the audience, Ilene and I will talk for a bit, but we do want to respond to your questions. So if you have questions, write them in the Q&A box, and we will get to them before the end of the program. So, Ilene, we're going to turn to the global economy, but let's start a little closer to home and talk a bit about the state of the U.S. economy in this moment. Here we are a week and a half before the election. There's sort of two stories here on the table. One is Trump's, which is basically that this is going to be a V-shaped recovery. We just need to open, and the economy's going to just come right back, roaring back. And the other is Biden's, which is that Trump has done great damage by not managing the pandemic, and that would be foolish to open too rapidly. But the question, I guess, is in some sense is who's right, but just how, in your view, just how deep is this recession, and how lasting is the damage likely to be?
Yeah, great questions, Fritz. And I know you've long studied, the role of stories and narratives, and you kind of frame the question in terms of the different stories being articulated by President Trump versus Vice President Biden. And I think we do really have a case of two very different stories. The Trump story we might characterize as a science fiction or a kind of alternative reality in which the MAGA vision has been achieved. The economy is doing well for all. It's met and vanquished the COVID challenge. The US economy is growing. The US is on top. It's widely admired as an institutional and an economic model. It doesn't have a variety of structural problems in the Trump narrative, such as a vast trade deficit, budget deficit, skyrocketing rates of unemployment, small business failure, medium-sized business failures, rising inequality, suffering, poverty, homelessness, structural racism, limited access to healthcare, A vaccine is imminent and people aren't dying. I mean, that's the kind of Trump narrative about where the economy is right now. Of course, the Biden story is a very, very different story. And I feel in the interest of full disclosure, I have to acknowledge that I buy the Biden story. But of course, as an academic, I've long had an attachment to facts. And so that's what makes the story being told by Biden much more compelling to me. I think we can think about the Biden story as a kind of cinema verite story. It's a very realistic and depressing documentary that upends the Trump narrative. The Biden story is very much framed around the idea, and I think the reality, that the economy is doing well for only a very few, those at the top portion of the income and the wealth distribution, large firms, especially firms in finance and banking and technology-oriented firms. The kinds of challenges I think that Biden has underscored are ones we're all aware of. Vast income and wealth inequality, particularly among those without a high school diploma, members of BIPOC communities, that is Black, Indigenous, and people of color-headed households are suffering. Economic insecurity is rampant. The social safety net is thin and quickly disappearing. All of the supports that were available through the early recovery plans, the CARES Act, are disappearing. Joblessness is on the rise, housing and medical insecurity, lack of access to childcare, protective equipment, employment among blue-collar, service and hospitality sectors. And of course, there are vast income and wealth gaps, particularly between Black and white households. So the story that Biden has been telling is a very, very different kind of story, one of kind of misery and unemployment and lost promise. And so we really get these very different narratives about where the US is. And again, one that's really underscored by the reality of the data of the world that we actually live in, and another kind of wrapped in mythology.
Yeah, well, thank you. You really fleshed out those two narratives rather fully, and let's go with the Biden narrative. As you say, you certainly subscribe more to that story. And if that's the case, I mean, we could talk a bit about the, what do we do question. How do we respond to this? And maybe we could take it in a lot of places. One would be just in terms of the at the macroeconomic level. The impact of the stimulus package that was passed and the consequences now if we fail, as appears to be the case right now, to do other things to really shore up the economy.
Yeah, I think it's critically important and just a great tragedy, Fritz, that a second recovery package has not been passed. The kind of political gridlock and the gamesmanship around the discussions of another COVID economic recovery package have been really horrifying to me. The Brookings Institution recently released a study that indicated that a new recovery bill valued at about $2 trillion worth of aid could bring the economy back to pre-pandemic growth rates by the third quarter of 2021. And so just another stimulus package, roughly on the order of the stimulus package that was passed this past spring, would bring much of the economy back in terms of at least raw economic growth to where it was prior to the pandemic. That's a very striking finding. I think the CARES package that was passed played a hugely important role in supporting vulnerable groups in our economy, during the first part, at least what seems to be so far, the first part of the pandemic. There were many different kinds of supports that were, of course, key parts of the CARES Act that was passed. They gave households access to extended unemployment benefits, expanded employment coverage to workers in the gig economy. For example, for some folks who were self-employed, kept many families from falling out of poverty, sustained consumption, kept people in their homes able to pay rent, kept some people working, kept families eating. And as all of that is disappearing, we are seeing more and more households slipping into poverty, homelessness, temporary unemployment becoming more or less permanent unemployment. We've got people leaving the labor market because they, of course, cannot safely work, particularly if they're blue-collar workers and service workers who can't work from home. And of course, if they don't have access to childcare or public education at this point. So the need to really pass another fiscal stimulus bill, and perhaps one beyond that, I think is critically important. At this point, in terms of responses to the economic challenges of COVID in the US, the only responsible actor in the room has been the US Federal Reserve, that is the US Central Bank, which I think has really taken up the challenge as much as it can to respond to the multiplicity of challenges associated with COVID. But of course, monetary policy can't do it all. And it's been really fascinating, and I'd say somewhat heartbreaking as well, to see Fed Governor Jerome Powell essentially pleading with policymakers in Washington to pass a fiscal bill.
Yeah, just to follow up briefly on that, I mean, the consequences of not passing this, something in addition to and just leaving it to the Fed, how long lasting are those structural changes that you're talking about, that people move from temporary to long-term unemployment, that they lose their homes, these other things that are there, once you go down that path, it's harder to come back, right?
Yes, absolutely. I think that's absolutely right. What we've been seeing is that what were temporary layoffs or furloughs are becoming permanent, of course, as firms of all sizes in the economy are shuttering. And what that has meant was that temporary spikes in unemployment are much more likely to become resilient and enduring. And the official unemployment statistics really understate the level of actual unemployment in the economy because of the way unemployment statistics are calculated. Essentially, you have to be looking for a job actively in the previous period in order to be actually counted as part of the labor force. And so what that means is, as more and more people are leaving the labor force, the unemployment figures tend to look a little bit more encouraging, but that's only because people that are now more or less permanently unemployed or underemployed are no longer counted. One statistic that I would just throw out is that 19 million people are no longer counted as part of the US labor force, though they have indicated a desire to have a job, but they've had to drop out of the search for employment for health reasons, for reasons of childcare, for reasons of the lack of educational access at the current period. And that's a very significant phenomenon. And I would just note that further within that group that's left the labor force, women are very heavily overrepresented as having left the labor force, the paid labor force, during the COVID crisis. Just one stat that I would throw out for consumption is that of the last 1.1 million people who have left the US labor force in just the last 2 months, over 800,000 of those are women. So women are reversing the kinds of gains that they've made in the labor force as they are forced to shoulder the burden of childcare, of family care, of social reproduction in the context of the COVID crisis. And that, of course, has not just short-term effects, but long-term effects on the economy.
Yeah, you're pointing to one of the phenomena here. And of course, inequality was a problem before the COVID, and
Mhm.
yet, one of the you're already pointing to this. I mean, it seems clear that COVID has really exacerbated that problem. I mean, here the stock market continues to do well. We've seen statistics about the top billionaires getting even richer. Um, where do you see this landing in terms of this problem that we face as a country, we faced beforehand, in terms of the extent of inequality in the society?
Yeah, inequality is, a major social and enduring ill in the US, and certainly the COVID crisis has kind of taken all of the US's problems, opened them up, exacerbated them in many important ways, and certainly COVID's effect on inequality of wealth and income and security and opportunity are quite clear. And as I would like to say, before we talk maybe about some specific inequality statistics, or at least try to wrap our mind around the scope of the problem of inequality in the US, just to make a kind of broader point, I think it's important to note that when we talk about inequality, we have to look beyond just income and wealth inequalities, even though those are critically important. There are inequalities in the nature of the risks that different people and different social groups face in their ability to shelter themselves from risks of all kinds, including the risk of premature death, the risk of limited access to healthcare, the risk of losing one's home and one livelihood. There's a really unequal ability to shoulder those kinds of risks. And so COVID has not just deepened income and wealth inequality, which is what economists are generally mostly preoccupied about, but I think COVID has also revealed the extraordinary extent of inequality in people's capacities to achieve human security, which in some senses, I think the measure of a good society.
At the end, yes.
Enjoy security. But to your more specific question, has inequality gotten much worse? Yes, I think it's probably obvious from what I've said. Inequalities in income and wealth have really widened during the COVID crisis. COVID has not been a problem for the wealthiest Americans. The richest 1% of all Americans hold about half of all stocks that are owned by US households. The share of wealth owned by the top 1% of all households is at a 3 decades high at the present time. The wealthiest 1% of the population are expecting to receive about $1.6 million individually in inheritance. And the bottom half of the income distribution has reason to expect just about $39,000. And that's important because about half of all wealth is actually attributable to intergenerational transfers. So we have not just inequalities in incomes earned and in the wealth portfolios of households in a kind of snapshot sense, but also in what households can expect to receive in the form of intergenerational transfers of wealth, which only magnify or ramify these intergenerational transmissions of inequality. Now, when we look at the poor in the US, prior to COVID, that is about 2019, which is the last year for which this statistic was collected, the poorer half of the US households held only 1% of US savings. One other statistic that I'll throw out, because I know as an economist, I can get lost in statistics, have just a kind of love of numbers, but I'll just mention that for households headed by Black Americans, Indigenous Americans, people of color, 40% of all of those households have exhausted all or most of their savings during COVID. And that's compared to 25% of white households that have exhausted all of their savings. So even in terms of the ability to shoulder some new shock on the horizon, the ability to do so is very different depending upon where you sit in our economy.
Well, that's a very daunting picture, to be sure. You, as you note, this was even before COVID, those statistics, and now with COVID exacerbating that problem. And also, you point rightly to the fact that this isn't just about economic numbers; that this is ultimately about life expectancy and access to education and quality of life, and those issues. We could go deep into this. I guess a question to you, though. I mean, obviously, part of this is in terms of what do we do? You know, where do we go from here? Part of this is about responding as quickly as we possibly can to the pandemic, opening, you know, avoiding the longer term consequences that we were talking about earlier. But what would you point to? And you obviously it's just so multifaceted, but maybe pick one or two elements of this that you would say, these are the things that I, you know, the president called you up and said, Professor Grabel, you know, I've read about this and this is a terrible problem, and I would love your advice. What would be the one or two things that you would start with anyway?
Okay, I'll try to be disciplined, though I might stretch the boundaries of one or two. I'll just confess in advance, but I'll try not to say too much about it. You know, as I noted earlier, just the kind of basic starting point is new recovery bill or bills. I mean, that's absolutely essential, and I think unconscionable that that hasn't happened. But then say, what might that look like, both in the short run and then more longer range bills to not just help the US economy to recover from the public health and the economic challenges associated with COVID, but also to build an economy that works for more people and works for better than the economy did even pre-COVID. What would that look like? That would look like having facilities that provide access to credit for small and medium-sized businesses, which have been particularly hard hit by the COVID crisis, and they remain very credit constrained despite the very ambitious and I think largely commendable monetary policy reaction by the Fed. The Fed's programs haven't trickled down sufficiently to small and medium-sized businesses, and part of that has to do with the kind of structure of the fiscal support plans that really haven't targeted small and medium-sized businesses, which play an important role in entrepreneurship and employment, particularly for communities that are economically and socially marginalized. The safety net in the US has been traditionally very thin and very shallow. The CARES Act of spring of 2020, I think, did a fairly commendable job of expanding the social safety net in the US temporarily. It didn't do all that I would like, but really rethinking what the social safety net looks like. Income supports for the poor. Universal basic incomes, access to universal pre-K, support for educational access, enhancing the role of unions, which have really been on the ropes for the last several decades, which has really played a very important role in wage compression for blue collar and service workers, raising the minimum wage, increasing healthcare access through a really ambitious program of healthcare reform, investments in infrastructure, particularly sustainable infrastructure, changing our tax system to make it fairer so that the wealthy pay their taxes, so that large firms pay their taxes, curbing corporate tax evasion, both domestically and through the international management of tax exposure. And I'll just note one other favorite area of policy of mine is re-regulating banks and the financial sector, which, as you noted earlier, have been among the best performing sectors in the US during the COVID crisis, so that we have this kind of striking and what many economists call a K-shaped recovery, though I'm hesitant to actually use the word recovery. I'd like to think of it more as a dispersal, where we have the fortunes of Wall Street and Main Street diverging very radically during the COVID crisis. And that was certainly something that we saw prior to the global financial crisis of 2008, and that divergence has only widened in the COVID era. And so this is, I think, a particularly important moment to think about how to re-regulate banks and finance to increase the degree to which they serve a kind of social purpose and support the economy in the sense of employment, redressing problems of poverty and inequality, and increasing access and opportunity. So that's a bit of my laundry list, and I hope it doesn't sound like I'm running for office here, but I've been thinking a lot about
but I'm voting for you. In fact, if I'm president, I'm asking you to come into the White House, I think. That was more than two, but it was a wonderful,
yes, I know.
comprehensive, no, I knew that, but it was a wonderfully comprehensive list of things that could be done. And so I think in this moment, it's helpful to have not just to wring our hands, but to know that there are things that could plausibly be done to address that. Let me shift gears. We certainly build this as the global economy on the brink, and so I want to talk about the global economy. So we've been talking really about the U.S., but obviously all these things are connected. And let me start before we get to the immediate situation posed by COVID. Let me take you or draw you out a bit about the big themes that are in your book, your most recent book, about the fundamental structure of the global economy. And in your book, you describe essentially three periods. First two driven largely by the United States, the immediate post-war era, until about, I don't know, 1980 or so, was, as you call it, with the reference to John Ruggie, a period of embedded liberalism, in which there was an international, yes, a kind of open internationalism, but really a lot of latitude for national systems of governance, for regulation, social safety net. And then we had a period, maybe beginning in the early 80s through the 90s or so, of this kind of thick globalization, as it were, the neoliberal moment, in which it was a kind of one size fits all, and it squeezed what Robert Wade calls the policy space available to national governments, shrank their options. And then, of course, we had really, driven in large part, I think, by the 2008 financial crisis and the recession, the Great Recession that followed, a kind of discrediting of that model and a coming apart. And so then you describe the fractured situation of today, where there's really no consensus about the structure of the global economy, or indeed what it should be, and what rules we play it by. And you describe that as a system of incoherence. You acknowledge that there are a lot of problems with that. You have an impressive list of, of contemporary maladies, of debt burdens, trade wars, currency wars, central bank problems, political backlash, undermining international efforts, like the UN's Sustainable Development Goals. And yet, you argue essentially that it's not all bad. And that there's at least the possibility for what you call productive incoherence. So why do you see the glass as half full?
It's a good question. It may be partly a matter of temperament and partly a kind of reaction, or I should say a corrective to the economists', I think, natural predilection as those who practice the dismal science, as economics is normally focused on, to highlight challenges and problems. And obviously, I think I've suggested to everyone that I'm not exactly optimistic or happy about the current environment. But that said, as you've pointed out, in some of my recent work, I've been really trying to highlight the extent to which the current moment often is also associated with opportunities, which I call the opportunities introduced by productive incoherence. And really what I mean by that is that the old centripetal systems that were centered around traditional powers, legacy institutions like the IMF and the World Bank, old practices, old ideas about policy, and even old economic theories that are no longer as useful, that the kind of chaos that the world has really been kind of reeling from since the global financial crisis of 2008 has kind of opened up space for a kind of aperture, a kind of questioning of old ideas, old strategies, old institutional architectures, and old approaches to policy. And I think that compared to a world of certainty, where economists and policymakers more or less adhere to one set of ideas that might be more favorable to one set of economic interests, and where they essentially place all their bets, or at least most of their bets, on one approach to policy, which you call the neoliberal approach, that we are living in a somewhat better world, despite the very serious challenges we face right now, because there is a kind of questioning and a kind of search for alternatives, and I think some degree of open-mindedness and learning about the benefits of systems that are less centripetal, that are more fragmented, that are more experimental, that provide more space for learning by doing, and are less committed to having a single actor and a single approach and a single set of institutions kind of driving how we think about and how we manage the economy. And so I think of this kind of moment of aperture or fragmentation as being incoherent. And I use that term incoherent and the modifier productive, which is very deliberately provocative, to suggest that in the chaos, there is also opportunity to rethink. And I think also some evidence in some contexts, particularly pre-COVID, that there was some modest rewiring going on in the global economy that was actually putting the global economy on a path pre-COVID of being somewhat more resilient than it had been, somewhat more inclusive, somewhat more open to a variety of approaches to policy, and which really opened up space for more debate about strategies that could be more tightly targeted to address particular kinds of social and economic needs in different countries. So I was somewhat heartened by the global financial crisis for that reason, because it really kind of shattered norms and practices.
Yeah. Well, some of this, let me just draw you out a little bit further on this, because some of this is, of course, is a critique of the neoliberalist order, and which at best was obviously a mixed story. It's certainly a certain amount of economic growth in that time, reduction of poverty levels around the world, and yet also inequality, not just in the US, but around the world, both between, especially within country, inequality, et cetera. So some of this is a reflection of a critique. Perhaps we should not lament the demise of that world. But could you say, I'd love to hear sort of a bit more about some of the specifics that you see having these experiments, these new spaces, these new options. What does that look like on the ground? Are there things that you could point to that say that was really interesting? This is really made possible by this more incoherent world.
Yeah, sure. I would say that what has been taking place since the global financial crisis has been a kind of experimentation, and some examples. And again, some of them are more encouraging, and some of the experiments are, of course, less encouraging. But on the realm of encouraging, if we stay positive for a moment, central banks around the world responded to the global financial crisis in historically and empirically unprecedented ways, by unveiling a new set of tools, responding very quickly and very aggressively to the challenges that were posed first by the global financial crisis. And during the COVID crisis, that has been the case for central banks only in the global north. Just to be clear about that, the response was much more global across the board, involving global north, south, and east countries during the global crisis. During the COVID crisis, central banks in the global south and the global east have not had room to maneuver. But what kinds of tools do I have in mind? Things that get a bit esoteric, but I'm inclined to mention currency swaps. The US Federal Reserve became not just the lender of last resort for the US economy during the global financial crisis, which is a role it has always had, but it also became essentially a lender of last resort for the global economy. And it did so by utilizing a set of tools, one of which is called a currency swap, which is essentially a line of credit that one central bank makes to another central bank. And the Federal Reserve opened up an unprecedented number of currency swap arrangements in order to protect liquidity in the world economy, particularly among countries that are of particular geopolitical and financial importance to the United States. That was a kind of example of an innovation. The Bretton Woods institutions, which are the institutions, the IMF and the World Bank, which were institutions that were born in the ashes of World War II. During the global crisis, they unveiled a variety of new approaches to economic policy assistance in the context of crisis that were very different in some important respects from the way that they've operated during previous crises, such as the developing country debt crisis of the 1970s and the 1980s. They made more funds available more quickly and with somewhat less severe conditions imposed on those loans than they had previously. Economists at the IMF and the World Bank and in the economics profession more broadly began to rethink their embrace of austerity, by which I mean belt-tightening during crises. Right. And rethinking began during the global crisis, and I think is very much still unfolding right now. And what that has meant is that central banks, where there is fiscal headspace, and governments, where there has been a political appetite and the economic resources, have been really able to set aside concerns about austerity and spend into the crisis. Obviously, much more has to happen along those lines. But prior to the global financial crisis, economists would have raised the red flag of inflation, even if that was really not a realistic forecast, but they have always traditionally used inflation as the kind of stop sign that stands between governments and spending during crises. So that's been, I think, a very important kind of innovation that's really taken place during the crisis, both the global crisis and now the COVID crisis. I'd also note that up until the COVID crisis, when the UN's Sustainable Development Goals, which are part of the UN's 2030 Sustainable Development Agenda, when those goals were much more present in policymakers' minds, there was a lot of activity around creating new partnerships and exploiting new sources of resources to solve what are critically important, kind of long-term and very expensive economic and social problems, such as the vast infrastructure finance gap in the world. There was a lot of creative problem solving around tapping new sources of infrastructure finance, particularly sustainable infrastructure finance, that involved new kinds of partnerships between old institutions like the World Bank, the Asian Development Bank, the Inter-American Development Bank, and some new players, like some of the Chinese-led institutions, like the Asian Infrastructure Investment Bank. Some of the discussions also involved public-private partnerships. So there was a kind of new dialogue in the global community about the scale and the nature of the challenges and about how to respond to those challenges using new and expanded pools of resources and tapping the resources and expertise of new actors. So those are some of the changes that I think I had been most excited about. I guess just to maybe mention one other that many people know that I've written some about, has to do with the way the global financial architecture became more multi-layered and messy as a consequence of a number of the developments that led to the global financial crisis of 2008 and then followed the global crisis. Prior to the global financial crisis of 2008, the Washington, D.C. based institutions and their regional analogs were mostly the only game in town. And the global crisis really changed the financial landscape and brought into the global financial landscape a number of new players that have increased the availability of finance for important goals, again, such as the infrastructure and some of the other 17 sustainable development goals, but it's also brought new voices to the table, such as voices of policymakers from some countries in the global South and global East, particularly mid-sized countries, so that the world looks different in terms of who has a seat at the table. Very concretely, for much of the post-war period, from the 1960s on specifically, when there was a global economic challenge, that challenge was discussed in a very formal sense by what was called the Group of Seven, the 7 largest industrialized countries. And a bit later on, when Russia was behaving, it would sometimes be added into the group and it would be called the G8. But what was notable about the global crisis is that it expanded that group. That group became the Group of 20. And it incorporated several countries from the global South and the global East, I think as a reflection of what could only be at that time, an honest realization that global economic power was dispersing and changing, and that the post-war architecture, which was dominated by the US and Europe, no longer really resembled the way the world was coming to look and was likely to look. So that's, I think, another important change that I would just flag.
I mean, there's a wonderfully rich depiction of the subtle, complex changes that were taking place, that took place in the global system post 2008, 2009 financial crisis. Let me bring us to the present. You've been touching on that a little bit along the way, but the fundamental question, I suppose, is how we're doing. We have this global pandemic. The title of this program was a global economy on the brink. Are we on the brink as globally? Is it possible? Does it make sense to even talk about the global economy? There's asymmetries in terms of how countries are doing in this context. But what would you say about how that world you just described is coping with the crisis of the moment?
Is coping very poorly. I think the session is aptly titled, we are on the brink. We are very much on the brink. The kinds of challenges on the global level that we are seeing are very likely, I would say certain, to have lasting damage on living standards, not just in the short term, but in the medium term and possibly in the long term. The picture is terrifying. Global economic growth is worse now than it has been since the Great Depression. The IMF recently forecast that global economic growth will be negative for 2020. There is a very significant contraction of global GDP forecasted for 2020. The best forecast we have is a 4.5% contraction in global GDP. That's the size of the global economy. And of course, for some countries, this is countries in the global south and the global east, the situation is, of course, far worse. Inequality within the global south and the global east, that is in-country inequality, is rising. Global unemployment is rising. By 2021, it is forecast that 150 million more people will be in extreme poverty. And I'll just note that extreme poverty means living on less than $1.90 per day. So the International Labor Organization is forecasting that by 2021, there'll be 150 million more people in extreme poverty. And if we define poverty even more broadly in terms of consistent access to food, consistent access to safe shelter, we take infant mortality into account, any of these other kind of broader metrics of poverty and of social ills. At this point, the best forecast that we have from the World Bank is that the ranks of the world's poor, broadly defined, will rise by between 240 million and 490 million people by 2021. And that reverses nearly a decade of progress in reducing poverty around the world. One other, very terrifying statistic, when we look at the poorest countries in the world, low-income countries are forecast to shrink. That is the size of their economies for the first time in 60 years. That's also the case, I should note, for middle-income countries. 89 million people have been pushed this year into extreme poverty, again, living on less than $1.90 a day. That's a 15% increase in extreme poverty. So that's just a kind of small window into the how are we doing question globally from the perspective of the world's poor and the most vulnerable countries in the world. The challenges are vast.
Yeah. I want to open for questions, and I see we have some questions in the chat box. Just very quickly, though, on this,
Sure.
China, which was, of course, as our president points out periodically, the source originally of the COVID virus, has done relatively well in managing that pandemic and appears to be reopening and perhaps is not shrinking. And relatively doing extremely well. And so the question is the extent to which at the end of all of this, the trends that were already in place, which were that China was rising relative to the US and the other powers, are we headed to a world in which replacing the US as a sort of organizing, driving force of the global economy, we see China in that role?
Yeah, great question. I mean, China, as you note, Fritz, has recovered economically, very robustly recently. The most recent data, which is just from the last quarter, the last few months, China registered a growth rate of 4.9%. It's an extremely high growth rate. And of course, other economic indicators like output, employment, consumer spending, exports, by all of those metrics as well, the Chinese economy is sort of going like gangbusters again. That does raise the question that you raised, which was already, I think, on everyone's mind pre-COVID, which is to say, are we moving toward a world that is China-centric rather than US-centric as it has been for the post-war period? It's a complicated question. What I would say to that is, in the short run, no. In the long run, possibly, in a very gradual and uneven sense. So just to unpack that a little bit, President Trump and others often flag this kind of fear of China displacing the US, the dollar being, a less important currency going forward, US dominated institutions like the IMF and the World Bank being less important, the Federal Reserve becoming a kind of side player. And that's the kind of fear narrative that we associate with the president and others. That's a very unrealistic and unhelpful narrative that has, I think, no empirical basis. The US is in many respects hardwired into the global economy, and that's particularly the case in terms of finance. So in the short run, the idea that the dollar's not going to be the world's most important currency, I think, is a really unrealistic scenario. 60% of all central bank reserves are denominated in dollars at the present time. The Chinese currency, which is the RMB, only constitutes 2% of all central bank reserves. In that sense, it's still a very sort of unimportant currency from the perspective of global central banking. The RMB is only the 6th most widely traded currency in the world. To throw out some other stats, the dollar is on one side of 88% of all currency transactions, and it is a party to the majority of all international trade contracts in goods. Derivatives contracts are largely denominated in dollars. When you look under the hood, in a very technical sense of the global financial architecture, at the payments and messaging systems, which are called SWIFT and CHIPS, okay, a very technical issue, but it's essentially how money moves around the world. Those are systems where the US plays a dominant role. It has control power over those systems, and those systems have the dollar hardwired into them in every respect. So in the short run, the issue of whether China is going to displace the US, I think, is a kind of myth. That said, and I know you were leaning toward the sort of longer run trajectory, are there signs that China is becoming a more important economy in the global sense, particularly in finance? Absolutely. We see that with the rise of Chinese-led institutions, with the increasing use of the RMB to settle bilateral trade agreements among countries, such as between China and Russia, China and India. China is starting to experiment with developing derivatives markets. It is selling more RMB-denominated bonds, though I would note that its signature Belt and Road Initiative mostly makes loans in dollars to the present time. So I think that's very important. And China is, I'd say, very much playing the long game, but in a somewhat half-hearted way when it comes to finance. China developed in 2016 an alternative to the SWIFT system. That's, again, the system that I described as the kind of arteries of the global financial system that mediates how money moves around the world, quite literally. China developed a new system called CIPS, CIPS, China dominated, to really protect itself from US financial power. But it processes in one day the amount of transactions that the SWIFT system, which is dominated by the US, processes it processes in 1 year what the SWIFT system processes in 1 day. So Chinese financial power is really very modest. Depending on the election, depending upon whether the next president weaponizes finance and uses trade and economic sanctions, whether or not the next president undermines or dismantles multilateralism in the way that's been happening, all of those developments certainly could propel progress toward a system in which the US has less and less of a role over the medium and long run. But that's really a question of what happens with the election, and I think what kinds of policies are put in place when we are looking at the world in January 2021.
Well, thank you for that. And fortunately, you've anticipated in your last answer many of the questions that are actually in the chat. So I'm going to just pick out a couple of them. We don't have very much time, and we'll try to keep the answers short. And but I'm going to pick out a couple that perhaps raise issues that haven't been touched on. So one, Alana Markles writes, "There's a lot of pressure on international organizations to evolve as a result of this crisis." And, what is your view about the most critical factors that current international organizations should consider as they revisit their policies and practices?
Great. I think a great question. I think looking very closely at building resilience, anti-fragility, policy flexibility, inclusion, that thinking about rebooting international organizations so that they place not efficiency at the center of their mission, but rather resilience, fragility, inclusion, opportunity, access, and not pristine policy blueprints. I think that would be a much more promising direction for rethinking the scope of multilateral cooperation.
That's great. Sabrina Ragalier, I think, probably butchered your name, my apologies. Do you expect this era of productive incoherence to eventually coalesce into a new coherent system? And also, does productive incoherence limit the ability to address issues that require global action, such as climate change?
Yeah, great question. To the 2 points, I am agnostic on the question of whether or not this present moment of productive incoherence is going to coalesce around a kind of new singular vision with the kind of clarity and power of the previous vision, whether it's the embedded liberal vision of the post-war period or the neoliberal vision of the 1970s and beyond. That said, I am cautiously optimistic that it will not. That is to say that the kind of hubris and the attachment to a singular vision, I think that that's an artifact of the previous era, and that the current era looks to me like one that is sort of much messier and much less likely to coalesce around a singular vision. That said, Sabrina raised the question, which is a good one. Aren't there some challenges, the scale of which require coordination and cooperation, that they cannot be addressed through kind of ad hoc or piecemeal interventions? The answer to that question is absolutely, that is the case. I think that the SDGs are a prime example. The failed responses to the COVID crisis around the world, which was, of course, a fragmented, chaotic response, is really case in point of one situation wherein coherence, coordination, cooperation, multilateralism, and the big bazookas are absolutely necessary.
We take another question here. It is disappointing for academics. I think there's a whole cottage industry of people looking for the next great paradigm, so that will probably continue. Sam Colvett writes or asks, you mentioned the general decline in GDP and living conditions that are expected due to COVID. What do you think the disastrous economic effects of the pandemic say about the health of the economy before the pandemic? What are some ways in which we can safeguard against such adverse effects in the future, presumably of a future pandemic?
Good question. I mean, I think that, the COVID crisis really laid bare what many of us had seen, but which were not a kind of a part of the larger conversation. That is to say, inequality was rampant, poverty, educational problems of educational access, healthcare access, cities were unlivable, infrastructure was crumbling, obviously, issues of sustainability were critically important and remain critically important. So this range of social and economic ills, structural racism and the knock-on effects of structural racism in our society over time, all of that was laid bare by the COVID crisis that I think makes face those challenges that were very much with the US and were also global problems, too obvious to ignore unless someone is kind of living in a dream world. I am somewhat optimistic that going forward, policymakers have really been shaken by these twin crises, the global crisis of 2008 and the COVID crisis, which comes so quickly on the heels of the global crisis, and appreciate that the problem of the need to decarbonize our economy is something that can no longer be ignored. I mean, for those of us that are living in the West is burning. Obviously, climate change, I know, is something that we all take very, very seriously. That the importance of dealing with climate change, I think, cannot be denied and is not likely to be denied by policymakers who accept science and expert knowledge. Policymakers, I think, have also come to understand that building economic and social systems that are resilient, that have deep and wide social safety nets, that are anti-fragile, that place inclusion at the center stage, that really set aside kind of hubris and reorient the economy around values of empathy, around caring, around social protection, cooperation, uplift, and repairing the damage from historical wrongs. I do leave this conversation today and in my general view of the world that these two crises really represent the kind of end of complacency, the way that ugly forms of nationalist populism have emerged around the world on the part of those social groups and those countries that were left behind in the previous decades, I think really has been an important wake-up call to like-minded policymakers, again, policymakers that lead with empathy, that can appreciate facts, knowledge, science, and can really take a look at the world that we're living in and the lived experience of many countries and of many social groups. So I think that the policy environment going forward is very likely to look very different.
We are unfortunately at time. I was going to ask a question from our colleague, Chiara Piovani, but you just answered it. She asked about whether all of this crisis will create an opportunity for a change in the conventional policy discourse. And I think you just answered that. In fact, the whole presentation has really answered that question. An amazingly rich description of the state of affairs in the US and the globe, and really the outlines of a different way of thinking about how we get from where we are to where we might want to be. Let me just thank all of the audience for being with us today, and particular wonderful thanks to Ilene Grabel for such a rich and stimulating conversation. I thoroughly enjoyed it, and I hope everyone else did as well. Thank you all.
Thank you all. I enjoyed it as well. Stay well.
All right. Stay well, everyone. Bye-bye.